All right, Mark Cuban, welcome to Decrypt.
Thanks for having me, Dan.
Thanks for joining. Let's start with kind of a few years back. Clearly, at some point, you bought an amount of Bitcoin. You just revealed that recently. Now, at the time, maybe you didn't make a lot of noise about it. Now, clearly, I feel like more recently, you are out there, you are talking about crypto, you are all in. And I guess I'd ask you, what has changed? What has changed for you? What has changed about the space?
Nothing really. The big battle I've always had with people who are into Bitcoin in particular was whether or not it was a currency. And remember, for the longest time, it was, yeah, it's going to be a currency. We just need Lightning. Then we'll be able to do a bunch of transactions. Everybody's going to realize that, and it'll be, it'll take over fiat. And I was like, there's just no way. There's just too many things working against it. The block size is everything, right? From a technological perspective, and Lightning was everything. Then you got the battles in 2017, I think it was, and you had the forks and all that kind of stuff. There was just too much stuff going on for it to really get to that point. And I really don't think that ever changes. And I always said Bitcoin was worth what somebody will pay for it. And so, as long as there's people coming in, it's okay. As long as the demand exceeds the supply, it's okay. And I've always compared it to gold and always said that it was better than gold. When people say gold has intrinsic value, that's ridiculous. The idea that, assigning, we like gold colored jewelry or gold original jewelry, and that's intrinsic value is ridiculous. And so I think for a lot of reasons, then we fast forward to this summer really, and you start to see the value of smart contracts and DeFi in particular and governance. And now you realize whether it's Bitcoin or Ethereum, even maybe some other choices, when somebody owns that, they become their own personal banker. And when somebody has that, and you can start creating other applications with smart contracts, and you get a lot of leverage, and that's really changed the game for me, and that's what got me excited.
So there's a few things there. I mean, let's talk more about the idea of, is it a currency? Is it a commodity? Is it digital gold? And the original white paper did say an electronic peer-to-peer cash system. And so in some ways, the skeptics who say, well, it's not used as cash, they're not wrong that originally it was called cash, but of course, technologies evolve, use cases evolve, and you're right. Right now, all the big believers, they say it's a store of value, it's digital gold. I guess I'd ask you though, is that as exciting and interesting if it's not something in addition, if it's just an asset that you're buying to hold, and we can talk separately about the Ethereum applications, but just for Bitcoin, if it's just digital gold, well, does that really match up with the original promise?
Well, I didn't read the white paper. I couldn't tell you all the details of the original promise, and I don't really care. What I know is what I know right now. And in, the existing environment, you could use it as collateral. And when you can use it as collateral and you can swap it, and depending on where you swap it, you can do it efficiently and effectively, then your options expand. And so because it's got a liquid marketplace, you can assign a value to it, not just as a store of value, but to act as collateral for other transactions. And what's happening is with DeFi, doing financial transactions, the friction is far less than it is in traditional centralized analog finance.
Let's talk about some of the narratives, because it's such a narrative-driven space. I mean, as we're discussing, it has sort of evolved. It's digital gold. Now there are a number of other use cases that are exciting, especially we'll get into the NFTs. But it's funny, I remember a few years back, it was blockchain, not Bitcoin. Banks coming out saying, well, we love blockchain. Don't ask us about Bitcoin. We don't love crypto, but we want to use blockchain. What did you make of all that? And now what has changed in terms of the reaction?
Yeah, in my first company, I wrote a lot of applications for decentralized or distributed databases. And we would deal with replication, we would do all kinds of stuff, right? And so I always saw the value in blockchain, and that was always the same argument I had. The challenge was with blockchain, you had to make a complete commitment and write around it, and then in terms of a Bitcoin environment. And then when Ethereum came out with smart contracts, it all got simplified dramatically, so that blockchain took on a completely different perspective and set of applications. And now there's another set of issues with Ethereum in terms of transactions per second. And so it's actually, they followed the same curve. And the difference is Bitcoin is kind of stuck with a store of value, even though there is a blockchain there. That's more just for confirming transactions that take place, with Bitcoin, buying and selling. Where now with Ethereum, with smart contracts, I'm teaching myself Solidity right now. It's not hard. If you've done any programming languages, it's pretty straightforward and easy. And so now you can start to see, and I started to see, the simplicity of creating smart contracts that are then stored in full on the blockchain, which are then immutable, right? And now you can start seeing, okay, what other things can happen with this? And now that we're starting to see level 2, 3, or 4 enhancements, there's a lot of narratives out there that are bullshit, right? But at the same time, fundamentally, there's a lot of strong components to it.
When you talk about the different levels, now of course we're talking about tech levels, but of course there's also different levels of understanding. And you also exist, you're a tech guy, but you're in this mainstream business world, you're on Shark Tank and
Friday nights on ABC, by the way.
Well, there you go. And I guess I'd ask, surely you have friends right now or peers who are asking you about this stuff, and their understanding level is at a zero. They've probably heard about Bitcoin. Maybe now they've also heard about Ethereum at most. How do you even begin to tell them, well, here's what I love about it, or here's what you need to understand? Because there are people, it's just too crazy.
I don't. It's like the early days of the internet. Like back in '95 when we were starting AudioNet, the streaming industry. I mean, literally, we called it internet broadcasting. Streaming wasn't even the term at that point. And when you tried to explain it to people, they'd be like, dude, I'll just turn on my radio or I'll turn on my TV. What the hell do I need the internet for? And then back then, you had to have a 56K modem. You had to download a TCP IP client. You had to download a media player. And then you had to find it on the website. And it had these little batch files. And so there was a lot of complexity there that made it difficult. But people found a way back then too. I mean, we had millions of users, from 95 to 2000. And so people found a way because the application allowed them to do things they otherwise couldn't do. If you were sitting in your office with a PC on your desk, you didn't have a radio, you didn't have a TV, right? The only way to get media was through broadcast.com and streaming. Now fast forward, 25, 26 years, and it's analogous for crypto. If you want to write yourself a loan, right, in 30 seconds or less, you're not going to a bank, but you'll find a way with crypto. If you want to take advantage of hopefully appreciation, not always appreciation, and keep it locked up and make some financial transactions, again, DeFi. If you want to really get into it and be super geeky about it and learn about yield farming and pooling and staking, you can make more than you would in your savings account. So there are driving applications, and that's what I talk about. It's the driving applications that are better solutions. What really got me excited about NFTs was the smart contracts that'll let you earn royalties on resales. That changed the way things were done. I couldn't take my old MP3 collection that I had, from whenever and resell it the way things are now. And the artists and the publishers couldn't make any money from it. Same with art, same with digital, same with business stuff. If I give a speech that I think is valuable, or if I'm at a conference and something is discussed, now I can tokenize it and sell it. I may not get any money for it, but at least I have that option. And so you're creating value in ways that you never could create before.
So when you say, Mark, there's some people, they ask about it and you don't even try to explain it.
No.
The question, at what point might they start to understand? Or, of course, for a while, people would say, well, you don't understand how email works. You don't understand how the internet works. You don't know SMTTP, HTTPS. Everyone just knows it works. And so people might get to a point where blockchain is involved in their lives. They're using it, but they don't need to understand it. That's all interesting, and yet there's also still quite a lot of friction. You talk about something like CryptoKitties, and you say, well, you just have to buy some ETH, then put it in, transfer it to your MetaMask wallet.
Okay, so look at CryptoKitties, right? Now they're on Flow, right? And now they're doing Top Shots. And what did Top Shots do that was great? You don't need a wallet. There is no cryptocurrency involved, right? You just put your credit card in there and buy your moments like you buy anything else. Right? They created a marketplace, which is no different than eBay or Amazon. But let's just say it emulates eBay, which is just an open marketplace for anything. Only because it's digital, it's in near real time, and you just pay a transaction fee, and you don't have all the hassles of receiving or sending like you do if you buy or sell a mouse. And so it's a simplification and a reduction of the friction and things we otherwise already do. And that's going to bring people to the platform. And I think that's your point, right? That when you simplify it, you're going to bring a lot of neophytes to the platform that are going to get excited about it. And that's what we're seeing with Top Shots.
Yeah, I think that's why Coinbase has done so well, for example, because even regular people, Joe Main Street, who they hear about Bitcoin and maybe they've decided I'm willing to buy a little bit of crypto, but it can't be 3-4 steps, you know,
Right.
and that's the big promise, is reducing that friction. You better make it really easy for them to get into this space.
Well, exactly right. Especially with the know your customer laws and everything, you've got to be able to deal with smaller investors or speculators or traders, whatever, and just pop in a credit card. And Coinbase has done a great job. And on top of that, Coinbase will give you free crypto if you do the rewards programs with, I'm one of those people who have done it. Give me some of this or give me some of that. I'll take my 3 minutes and answer the questions and watch the videos. Sure. I mean, they've been really, really smart in simplification and marketing.
And of course, it's not just Coinbase now, no surprise. Some of those non-pure play crypto companies, consumer-facing names, Robinhood, PayPal, Square, they've added Bitcoin buying because, they want to grab from that funnel. And I guess I'd zoom out and say, we've been talking about the applications of this tech, but if we look at the price surge and the recent Bitcoin bull run, it seems to me it's very much part of the sort of retail investor revolution. It's not unrelated to the pandemic. This stuff all accelerated, in 2020. And the GameStop stuff was related. I mean, yes, it was GameStop, but it's Reddit fueled, it's social media fueled. And I'd ask your take on that. I mean, how was crypto involved with that? How was all that stuff good for crypto adoption as well?
It's the whole concept of decentralization and fighting the man, right? It's all about governance. WSB investors, GameStop, AMC, etc. They want to govern themselves. They don't want to be dictated to by anybody else. And so, Wall Street Bets is its own form of governance and voting. They're all staking in their own little way. Sometimes you may stake great information, a research report you wrote, and you let it ride and see what kind of returns you can get. But when you have all these validators effectively who have staked, they bought GME or AMC, that's their staking, right? And maybe I'm getting all the terminology wrong because I'm just learning some of it, but they're staking it and then they're becoming validators, right? And that validation is them buying the stock and just repeating it as much as possible and getting diamond hands and hodling, which however you want to call it. And that's decentralization. And that's the whole underpinning of blockchain and crypto. Let's take control of our own destiny. And it's not 100% right because some applications are centralized and some players pretend they're decentralized and they're not, and yada, yada. And that goes back to your narratives. A lot of people create BS narratives. But in reality, when it all comes down to it, it is analogous simply because it's decentralized and it's giving power to validators. And that's what the market needed.
And don't forget tendies, Mark, the tendies.
Yeah, the tendies. Yeah.
You mentioned Wall Street Bets. Let's talk a little bit about the big figures, and you're one of them now, who have been tweeting about crypto. What do you make of Elon Musk's tweets? I mean, all of the Dogecoin stuff, and now as we do this interview, just today it appears maybe he might get into some, legal trouble again for those tweets.
Yeah, I don't know about the legal side of it, but that's just Elon, right? He likes to raise hell and he's got the platform to do it. If he had 10 followers, it wouldn't matter. But, or for me for that matter either. But, when you have that platform and people know that you influence stocks. But let me just say this. I used to go on CNBC all the time, right? And I used to, tell my friends, here's the stock that I have that I'm going to talk about. Just tell me, record it so I can see what happens to the price of the stock when I talk about it. And it happens all the time. And to this day, people will go on CNBC and they'll just pimp a stock out, right? And then you talk about narratives. What is buy and hold? Buy and hold is a narrative to help stock prices go up. What's what's a cyclical stock versus a consumer stock? Those are just narratives in order to get people to do something, right? Well, Apple used to be a cyclical stock, and so the PE was under the S&P, PE of 16. It was only 12, so we converted it to a growth stock because its growth rate is above this, and now you can pay 18 PE. The stock is still the same. The company's still the same, right? Nothing has changed. And so the business of creating narratives is as old as the stock market. But it's just different now because it's new.
And in some ways that's true about Bitcoin. I mean, Bitcoin hasn't changed. It's just that some more big, serious Wall Street names have now decided, I believe in it. I'm going to invest some small portion of my portfolio in it.
Yeah, I mean, it's algorithmic scarcity, right? And once you start buying into that, and the fact, and I think most of the big treasuries, their biggest fear is getting hacked. And, and that's legit, right? As you get into quantum computing, but you can also make the argument that, they're not going to go after Bitcoin first because it's probably awful hard given the circumstances. They'll go after some big bank because that's where the money is. But yeah, so Bitcoin has been around a long time, but I think like anything else, the internet, we talk about it like 1995 was the start of the internet. It wasn't. It started, years, decades before that. In DARPA and BBN, Will Beck and Newman, and so there was a history there. So all technologies go through this confidence curve and trust curve, and Bitcoin and crypto is no different. And all of them, just like the early days of the commercial internet, the consumer internet, there's going to be a lot of BS, a lot of fluff, a lot of nonsense, a lot of narratives, and there are going to be some great companies that evolve and some that die.
Related to that, Mark, just recently Coinbase dropped its S1 filing before it's going to go public via direct listing. And it's always interesting in those S1s to look at the risk factors.
Right.
Some of it is boilerplate legal language, but then there's always some kind of interesting wrinkles. And I noticed in Coinbase is saying that, negative social media discussion around certain coins could hurt us, negative perceptions in media coverage of crypto. And I guess I'd ask you, even as so many new use cases come around and more serious people have bought in, you still have a lot of people out there who they have some sort of vague association of Bitcoin with cybercrime. They go, Bitcoin's used by criminals or it's used for hacks. What do you think it would take for that to change and go away?
Just time. So cash is used by criminals. It's just, there used to be bearer bonds, right? That all the old movies, right? They'd go in to steal the bearer bonds because they were as good as cash. And so who cares, right? Here's what it comes down to. Either the applications are going to be there to make life better and to make business more productive, efficient, and profitable, or they're not. And that is everything right there. And so if it's easier to transmit value from point A to point B using Bitcoin or using Ethereum or using somebody else, all right, that's what we're going to do, because the way SWIFT is set up right now for international transfers is ridiculous. And like like Jeff Bezos says, your margin is my opportunity. Right. It's the same here. The bank's margin is Bitcoin and crypto's opportunity, particularly for finance, and it's going to impact it. I keep on telling people, and they don't fully understand it with DeFi, that when you own crypto, you become your own personal banker. You get to borrow against your Bitcoin or your Ethereum faster, quicker, better than any way you've ever been able to borrow before. I have a decent amount of money in the bank, right? And I have to go to my banker and sign forms. Now it's easier now with DocuSign, and get their permission to borrow against my money on an over collateralized basis. So when I wanted a mortgage for my, let's just put aside a mortgage, needed.
You can do mortgage on the blockchain now, on Ethereum blockchain.
Well, exactly, right? And so the whole point being, when you have qualified digital tradable assets, because they can be traded in real time, they're very easy to collateralize. And when they're easy to collateralize and price, then it's really easy to lend against. And so now you're seeing a battle for liquidity, and there's a lot of BS in there now with tokens and this and that as people try to overqualify yields and overpay to get liquidity. But that'll work itself out, because that's not a real business long term. You're not going to have 10 zillion different tokens created over the next 20 years that all pay in their own token to try to get more liquidity, right? There's nothing valued there. It's just in your early days of anything, it's just easy to try to do that to make some money. But longer term, friction-free banking, I had a conversation with somebody today, and I truly think that you're going to see retail stores in malls, and you're going to see influencers on college campuses. And what they're going to do is they're going to go around and sign people up and get them crypto wallets and walk them through the whole know your customer, take a picture of your driver's license, get you all set up, and oh, by the way, here's $5 in Ethereum, or here's $5 in Bitcoin, because it's cheaper than other marketing costs. Now you're set up, here's what you can do. And oh, by the way, once you get up to $1,000 in whatever crypto you want to have, or whatever tokens, if it's one of the liquid names, then talk to that guy over there, because you can borrow it in real time for Bitcoin at less than 1%, and you can turn it into USDC or Tether or whatever, and here's a credit card that you can use against it, or a debit card better, right? And now all of a sudden you can spend money. So if you need to spend, if, you know, you've got $1,000 worth of crypto, your washing machine broke, you're getting paid in 2 weeks, you need to borrow $200 to fix it. You know, you can put it on your credit card, but it's, you know, if you can't pay it off in X number of days, right, you're going to get hit with 19%. Here's 1% flat. And if you pay it off in 30 days, you know, it's cost you 1%, and that's it. And there's no fees, right? Your credit card fees and your debit card fees and all that shit, right? And there's no overdrafts. And yeah, you can get called in, but that's just like if you don't pay your credit card deal in 30 days, your interest rates are 19 to 29%. So you get hit just as bad there. So just the efficiency of it, you know, so I really think you're going to see retail presence. You're going to see college kids get paid to sign people up and get them hooked in, and that's going to help escalate it to the next level.
Now, I'm so glad you mentioned paying in crypto, because Tesla got all the attention for buying 1.5 billion worth of Bitcoin, but it also disclosed that eventually it wants to accept crypto as payment. PayPal is going to let people pay in crypto. Now, the irony there is that for now, most people don't want to spend their crypto, right? I mean, as the prices are rising, you wouldn't want to spend it. You want to hold on to it.
Yeah, I mean, look, and you still have to convert it to fiat, right? And so as long as you have to convert it to fiat, you're not really spending in crypto. You're not really spending in crypto anyway.
Right.
Right. Like the Mavs, we took our first Bitcoin 5-6 years ago. Only nobody spent anything. And the only reason I did it was to prove a point that no one was going to buy anything. And then we did it again a couple years ago, and we sold $314 worth at whatever Bitcoin was at the time. Again, somebody was just trying to prove a point that they would buy something. I was trying to prove a point that not many people would. And it is what it is. But again, it's a store of value that's liquid, easily priceable. And when you have anything like that, particularly that's digital, because it can trade in real time almost, right, in milliseconds, then it's really easy to value and lets you have a debit card against that, which allows you to go out there. And it's almost like if you go to a foreign country and you put it on your American Express, they just hit you for whatever the currency exchange rate is that they have. It's no different.
You mentioned when the Mavs started accepting it, and of course, you know, you got the team, you got your hands in so many different businesses. Does this stuff, the crypto and the DeFi world, excite you right now more than anything else you're involved with?
Never excites me more than the Mavs. That's a given. But it's exciting because, like the early days of the internet, it's disruptive. And it went from, okay, blockchain, and you build all your layers on top of it, to Bitcoin blockchain you build, and to Ethereum with smart contracts, which are really easy to do, to, okay, now let's tokenize, and people started making readily available the tokenization via the smart contracts. And that all of a sudden is what really enabled almost all of this, right? The simplification of smart contracts and the almost ubiquity within the industry of smart contracts. That was the change. That's what gets me excited, because now all these companies, all these SaaS companies, all these different companies, I could see just disrupting the fuck out of them, right? I mean, it's just like, imagine an accounting system that you have trained accountants that you pay as accountants, and there's, 30, 40 validators around the world that are validating. And when I say pay, you pay them in tokens or whatever, right? They're just validators, or they invest money and become validators, and now they look at a general ledger entry, and they all have to have consensus on the general ledger entry, and they don't know each other. Thered be no Enrons, right? You wouldn't have the level of fraud that you have now. Imagine in the healthcare system that you have a claim with the insurance company, and they want to deny it because the insurance company, quote unquote, validated the claims adjusters. They want to deny it when they're just messing with you, right? Now imagine if you had a bunch of validators who staked and said, you know what, we're going to get paid for validating, and I'm going to get my return, but I'll be a validator for these types of insurance claims because I'm qualified. Now all of a sudden, if they all independently have to verify that block, that transaction, you've changed the game, and you go to the hospital and you're going to be judged fairly, as opposed to the insurance company looking at that drug that you need and saying no.
Yep. And of course, now people are talking about another use case of blockchain for proof of COVID vaccination. So
Yeah,
yet
of course.
another
It's the same
possible-
type of thing. It's the same type
Yeah.
of thing. You know, we're talking about it so for ticketing for blockchain, right? So it completely changes the resale market. And if you tie it to an individual that has, let's just say, their social security number and it's been validated by, multiple sources along, the healthcare chain, whatever it may be, then boom, you're good. You're good to go. And right in the blockchain, depending on what you use, you can just put a little picture in there. And there's your picture. And it's immutable and it's there forever.
Yeah, feel free to break some news here, Mark, on what the Mavs are about to do with blockchain.
We're trying to figure it all out, right? The blockchain side is easy. It's just like going all the way up for the layers and making sure the application works, it's safe, people are confident in it, and there's a marketplace to exchange it, because that allows us to get to keep on making money on every resale, something we don't do now.
Clearly, what excites you most or more right now are these applications and the NFTs, and a lot of that is Ethereum based, Ethereum built. Now, I've heard you say elsewhere that you still own more Bitcoin, but it sounds like you are in the camp of the Ethereum blockchain will be the one that's really the end all be all, or at least the evolution of Bitcoin.
You talk to people who feel different ways, and it really depends on where their vested interest is. I've read through and the roll-ups, which, that's basically just batch processing, and that can work at some level. And it could work easily, actually, just depending on the scale. It's harder to get really, really big. And then you have sharding. That has its pluses and minuses. And then you have the multiple GPUs that you can bond together, and that allows you the greatest opportunity to grow fast and grow and scale. That, we've seen that with AWS and Azure and all the rest, and AI. That's exactly what they're trying to do to scale processing. And so there are ways to solve the problem. It's just a race, right? There's the race to 2.0, if and when that happens. There's the race of the higher layers to see if and where that works, and if the applications start testing them and it works. And then there's the competitors that say, why are you wasting your time? My blockchain does 40,000 TPS. Why are you even? And I charge you 1/100th of a penny for every transaction. Why are you even dealing with that? And so, that's what makes a market. That's what makes competition, and that's the nature of business. And so, may the best solution win.
Let's talk specifically about NFTs, non-fungible tokens. We've thrown the term around. That is what has caught your attention most recently, and you're out there sharing these collectibles. Now, of course, there are different examples. It's happening now in music. It's happening with sports and sports highlights. And I had asked you at the beginning of the interview how you explain this stuff writ large to newbies. Boy, NFTs are even further down the rabbit hole. I mean, you try to tell someone, well, it's a digital collectible, and in some cases it's a video of a highlight, and they might say, well, I can see a sports highlight on Twitter.
Yeah, so, look, I got my favorite basketball card from when I was a kid, John Brisker, right? Now, if I wanted to sell this, I'd have to get it valued, right? And that's very subjective. Then I'd have to wrap it up into, some sort of, some way to deal with it, to send it.
It better be mid condition. Yeah.
Yeah. Well, yeah. To verify the condition, I have to grade it, right? Then I have to package it, and I probably for the good stuff, I already have it packaged. And then I have to ship it. Then it has to be received. Then it has to be validated. Then I get my money, and you hope everybody is happy along the way, and not everybody always is. Yet and it's not like I look at my John Brisker card. And I know nobody else knows who John Brisker is but me. He played in the NBA, and the reason I love this guy, he played for a Pittsburgh Condors team, and what I love about him, he quit basketball to become a mercenary in Africa, and that's what he was until he was killed as a mercenary.
Wow.
So that's a cool as hell story. That's all I know of it, but I always thought it was cool when I was a kid. And so but the real beauty of owning a John Brisker card is just the joy of ownership. I don't take it out and look at it all the time. The picture, right? John Brisker again. You can find that online somewhere. There's nothing unique, and it's not like the picture is artwork, and there's nothing special about the stats and the commentary in the back. All that's available online. It's the ownership that comes with it. And by physically having it, that's your only proof of ownership. Now fast forward to Top Shots and NFTs, you get all the benefits of the joy of ownership without any of the hassles. Supposedly, right? Now you can argue, right, with Dapper and with Top Shots, you can't get your money out. You don't have access to everything. Yada 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 yada. So there's, it's all new and it's all just growing. So we'll cut them some slack. But generically with an NFT, all the same joy of ownership, all the value creation or loss for that matter, the friction-free trading and transacting, the ability to pay royalties to the original creator after every sale, which is enormous and really enables more creativity to come to the marketplace. Whoever designed good old John Brisker and took his picture is not getting any value whatsoever. Right. And the next baseball card, it's the same thing. And every resale or tickets for that matter, whatever the NFT is, you're not getting any ongoing value. And that's a significant game changer. And so once you get over that perception that I have to physically be able to touch it and realize that's more hassle, but the joy of ownership is really what matters, then the game changes dramatically for everybody. And you're starting to see that with Top Shots, and you're starting to see that with art. You're seeing it with CryptoPunks. You're seeing it with Beeble. You're seeing it with Bitcoin Origin. You're seeing it on Mintable. You're seeing it on Rarible. You're seeing it on OpenSea. You're seeing it on all these platforms because you still own it, and you get to track the value every minute of every day, as opposed to sitting there with my son and putting the card into maybe one or two programs or on eBay to see what it's worth.
Now, one funny aspect of this, or wrinkle, and we've talked a little bit about all the different contradictions there sometimes are with the narratives. A lot of people, Mark, what they love about this whole space, they say privacy and more privacy, and yet, when you share something like your Rarible address, I mean, we can then click through and click to see the wallet address on Etherscan. Now, right. Someone like you probably might be masking in some way, or you have multiple wallets, but
I got a lot of wallets. Yeah, I got a lot of wallets.
Right. So you shared something on Rarible. I clicked. I can see the wallet address on Etherscan, and I can see, well, this particular one has $38,000 worth of assets in it, and right. I can see all the coins. And you've got multiple wallets. Someone like Lindsay Lohan, I don't know how much she's doing in this space. I don't know if some of these celebrities realize how visible the holdings are.
It's not as private as people think, and that's the whole point of the blockchain, right? That is 100% public because it's all verifiable, and once that address is associated with an individual or company, whatever it is, but of course, I could just take it all out and put it in another wallet and it'd all be empty, right? So it just depends on why or what, and for me, 99% of what I'm doing right now is just learning. Right, learning how pricing mechanisms work, learning how the technology works, learning how to mint, learning how to post, learning all this stuff is part of a learning curve, because it does need to get simpler, and it does need to be easier so that celeb or not, anybody can do it.
Yeah, you talk about learning, and I was intending to ask you whether you are hearing from more of your players about this stuff, because we're talking about Top Shot. The athletes are suddenly really interested, right?
Yeah, they're starting to because they see there's value there. And where there's value, they know they can get paid. And if they know they get paid, they're interested. Just like anybody, right? If Dan Roberts all of a sudden saw, a video of you typing on your keyboard, and it showed up on Top Shots and it was selling for $600 or $6,000, you're like, I got to get paid, right? And so that's what we're seeing.
Yeah, it's great for art and it's great for artists. It makes a lot of sense. Mark, I think a fun way to wrap this up would be a little bit of a lightning round.
Fire away.
It doesn't have to be just one word, but your rapid reaction thoughts on some of these things in the crypto world, okay?
Uh-huh.
Okay. DeFi.
Bananas.
Elon Musk.
Bananas.
Tether.
Bananas. No, I'm just kidding. Sorry to fuck with you like that. I get so much shit about all that. Okay, so let's start again. I'll give you a real.
Okay, you sure?
Yeah.
Okay, Tether.
Tether. Questions.
China coin.
First, I don't know. Don't know enough.
Libra.
Libra, against it.
Binance.
Depends which part.
Mining and the environment.
Challenge for Bitcoin and Ethereum.
Dogecoin.
Doggy coin, but better than a lottery ticket.
Wow. Janet Yellen and Bitcoin.
Still has a lot to learn.
Okay. Good lightning round. And bananas.
Bananas. Go bananas. It's just ever since I said that, every time I do something on Twitter, somebody posts banana this or banana that. It just cracks me up.
Why is that the most common troll?
Well, so one day I did an interview, and it was one of those rapid fire type things, right? And so I was talking about blockchain versus Bitcoin and the fact that neither gold or Bitcoin had immediate utility. right? Because you can't hold it, you can't do anything with it, right? It's just a store of value. And so I said, in terms of utility, I'd rather have a banana. At least I can eat a banana. And ever since then, bam, I just got crushed. And I love it, right? I mess with people over it and have had fun with it. But yeah, it's always bananas.
Mark, my favorite Calvin and Hobbes strip. They're walking in the woods, and Hobbes says, if you could wish for anything right now, what would it be? And Calvin says, $1 million. And Hobbes says, I would just wish for a peanut butter jelly sandwich and some milk. And Calvin, for $3, goes, that's so stupid. That's so stupid. What? Peanut butter jelly sandwich. I want $1 million. And then the final panel is they're in the house, and Hobbes is eating the sandwich and says, well, I got my wish. Good, right?
You don't get if you don't ask.
All right, really good stuff. And Mark Cuban, we hope to have you back on Decrypt soon. Keep in touch.
Absolutely.
And we'll be tracking your adventures in crypto.
I appreciate it. Great interview. It was a lot of fun. Thanks for having me.